Good day all, it's Dr. So here of Token Trading Research. Okay, good day all. What are we going to look at today? Today we are going to look at, let me just bring the screen up. Pinch from market maker. So what does that mean? You may have observed the recent price action of the Bitcoin or other cryptocurrency. Is either it is a pump and stay for some time, or not at all. So what do you do when there is no volatility, or when you are lured in to the pump and you place a trade and it becomes a trap? Now the reason why it's a trap is because of leverage. If you are going to win in this game, you need to decide which strategy to use. You may choose to use leverage, which is gambling. Oftentimes, you may not win. You may lose your money. Or you may decide to trade, which is buy and hold. The crypto market, especially established coins, is going to be there. This is not a financial advice. There's a lot that has happened in the scene that it is not going to disappear overnight. As you know, trading is risky. Any investment is risky. So if you decide you want to be in the crypto space, you want to trade, and you have found a coin that you trust that is going to be there for some time, and you've lost your money by using leverage of any type, then why don't you try the alternative of buying and selling when there's a profit? So this is when this strategy becomes useful. When the volatility is not just there, or if there is a volatility, but it's more or less lure you to place a trade and you get trapped. So if you are not on leverage, you'll be able to weather such a trap of your asset. Again, people want audience, so they want to recruit as many people as possible. They want to deliver a message you want to hear. You become a sheeple of a string along pundits. That is how they keep you. Then you also find that more or less the micros or microeconomics are now very useless. You spent years that you could have used to improve yourself listening to all sort of microeconomics that really doesn't determine the direction of the trade, or you being able to place a winning trade. The technical analysis have become useless. But there is something in front of you, which is the price action, which you can always call on at any time. And this can also empower you so that you don't even waste time with those string along pundits. The indicator has become useless. Then the strategy is run with the market maker. So when he goes to the water hole, then follow him to the water hole. When he or she exit the market as well. That is what we are looking at in this strategy. Now, how do you apply such strategy? Now I'm going to proceed to charts. So the chart is going to come up. Just bear with me. Okay. Right. So we have the Bitcoin chart here. Every asset follows the same procedure. Whether it is other coins, they all follow the Bitcoin price action. So if you decide on using this methodology, whatever coin you've picked and you've researched the coin, that it's going to be dead, it's not going to be a rock pool. Bitcoin, for example, can never be a rock pool overnight. Okay, let's take that as an example. Let's start with a monthly time frame, for example, and I'm going to look at some few years here, starting from 2010 on this chart. Of course, the trading started. The Bitcoin was invented 2008. Then you have them in the market in the earlier days in 2009. Ever since then, the movement has always been there's a markup price, there's a markdown price, and this is driven by what is literally termed as bull and bear markets. So when there is a markup, when there is a markdown price, it is a zero-sum game. So there is always activity of traders, investors that actually push the price up, and the market maker who makes sure that the liquidity is there. From the chart, we see the up and down movement. It's literally what is happening. Now, if you are following this methodology, if you are a long-term player and you've seen the all-time high of 69,000 US dollars there, you could buy the Bitcoin at this point in time and wait and hold until it gets to 69,000 and sell. And that's it. If that satisfies you. But if you become greedy and think that it's going to go to 1 million, what is going to happen is it is going to drop. Anything could happen in the market. Then you have to wait again, or you sell your coin. Most people, that is what they do. They lose their coin. They sell their coin because they just think when there is a markdown or when the price goes down, it is more or less going to zero, which is not always the case. So this is in a big picture using the higher time frame. Now, what if we are thinking of a day time frame? So in front of us, you may have observed that the last drop that has been happening the whole of last year, which actually peaked sometime in November, that was during the FTX debacle, that took us to 15,479 on this exchange. On some other exchanges, it may have gone below or just a little above that. If you have bought a coin on spot or without leverage, as at the price at the moment of 23,781, or yesterday when it was 25 or 25,270, that would have made you almost about 8 grand. Now, what is the difference? If you are using leverage, you commit less amount of money, but you run the risk of losing it. Whereas, if you buy on spot, you don't lose your money. As per when the price rally up, and what you deem as a profit, you take the profit. Now, how do you enter again? You could always use the moving average of 50, 200, 800. it always retraces back to the mean. So if you see what's happening here, it rallies, then it came back to the mean at 21,000, around 21,382 or 21,400. Then it rallies again. At some point, it is going to come to the mean at around 22,000. Depending when. It may decide to shoot up. Then the moving average will also move up. But if you are not using leverage, you are able to weather these situations. Now, it is more or less the market maker enticing people to place a trade and bring the price down. So if you are able to catch any trade, if you are looking at a daytime frame, for example, and you deem any level as a profit as it continues to go up, then you sell and take your profits away. Then wait until it retraces back again. Play the game this way. It only works without leverage or with spots. But if you are someone who has been winning with leverage trading, this video is not for you. This is where I'm going to stop the discussion today. Do subscribe so that we start getting traction. That will enable me to start a lot of live sessions where we will be interacting and be looking at placing a trade and exiting a trade. Do like and subscribe. Press the notification button so that when I'm online, you are able to be notified. On that note, I am going to be closing here, and thanks for coming.